I don't want to throw water on our top story, but I'm going to do it anyway. Is this number kind of meaningless because of the Census Bureau adding workers last month?
Yeah, it could be. I'm not sure if it's going to be this month, Brian, or next month. So we might, one of these 2 months, we're going to see a big pop in government employment. Private sector payroll employment, that'll not, obviously be affected by the census. But the top line number, yeah, that could be affected by it.
So if we get a weaker than expected number, people say, well, that could be seasonal. If we get a better than expected number, people will say, well, that's just maybe the census workers inflating it. So forget about the headline number. What are you going to dig into? Is it going to be wage gains? Is it going to be average hourly earnings? What matters the most to you, Mark?
Well, I mean, private sector payrolls matter. So just, forget about the government employment for a second if the census is hiring. And that will come in, somewhere between 175 and 200K. If that's what we get, that would be very close to consensus. Life goes on, nothing really changes. Also, the unemployment rate, my sense is that's going to tick down. So we're at 3.8%. That'll probably tick down to 3.7%. And then, of course, wages. Wage growth has been accelerating, and I'd expect that to continue to accelerate. So, like any economist, I think all the numbers matter.
I don't know if you're listening to the top of the show as you drove into the studio, but Danielle DiMartino Booth kind of called you out this morning. She says, this guy, Mark Zandi, says...
Did she?
Yeah, she says, like, the number, whatever it is maybe not reflective of the overall economy. And I said, well, by the way, he's coming on later on in the show. What did you mean? You said that on CNBC earlier. What did you mean by that?
Oh, that was in reference to the ADP number. As you know, Brian, we take the ADP payroll number, and based on that and other economic data, we make an estimate of the BLS number. And the ADP number came in strong, 275,000. And all I was saying was, for technical reasons, which I can go into if you'd like, but for technical reasons, that's pumped up. That in reality, it's probably closer to 175 to 200. That's all I meant.
Okay, there you go. So ADP maybe not reflective as much. How do you read the economy, Mark? Is this an economy that needs quantitative easing, like the president said? Does it need a 100 basis point or 1% rate cut?
Is that what he said? No. It's a solid economy. I mean, we got juiced up last year. Growth was strong, close to 3% GDP growth. It was very strong, but that was deficit finance tax cuts. The benefit of that is now largely faded, so growth has slowed, and now we're back to growth rates that are, very consistent with the growth rates we've been getting all along during this economic expansion, somewhere between 2 and 2.5%. So that's solid growth. That's, still above the potential growth rate of the economy. At that pace of growth, unemployment will continue to notch lower, but it's definitely slower than it was last year.
Dare we suggest that the Fed, which has been kicked around like an old soccer ball, is actually doing a pretty decent job?
Yeah, it's obviously getting criticism from all sides here. Folks like the president want the Fed to cut rates, and then you've got other folks that think rates should go up. But in my view, the Fed has rates exactly where they should be. Very consistent with an economy that's growing nicely, unemployment's low, wage growth is picking up. Everything feels okay. So I think where the Fed is okay as well.
Question is, how long can this last? How long can the American expansion go on, Mark?
Well, Brian, we're past full employment, so we're at a 3.8% unemployment rate, headed lower. There's a lot of debate as to what is full employment, but, most estimates, and I would concur, are somewhere in the mid-4s. At some point, unemployment will have to rise to go back to full employment, or the economy will overheat. Now, that's not this month, that's not this quarter, may not even be this year, but, that's sometime in our near future. Once unemployment starts to rise, even from a very low level, that's the fodder for recession, because as soon as unemployment rises, people sense that immediately. They grow cautious. Businesses see that. They pull back on hiring, and you get into this vicious cycle. That's a recession. So that's why when you get at this point in the business cycle, when the labor market is very tight, unemployment is very low, very difficult to land the plane on the tarmac.